good afternoon for all those attending who are attending from the United Kingdom, and a good morning those in the US who I'm delighted to say are attending, and a particular warm welcome to our friends and colleagues in India who I know are also online and viewing this webinar. And welcome everybody. My name is Elliot Heilpern. I'm the Membership Director of the Payments Business. And very briefly, for those of you who may not be familiar with us, we are a networking forum, if you like. This is the first of a series of a number of key webinars which we are going to offer and undertake during the course of 2021. Our aim is to bring many industry participants together from different areas of the industry, fintechs, banks, the regulatory world, and our aim is to work in both the retail payment sector, wholesale payments sector, and the corporate treasury environment. And we do this through partnering, we do this by working with stakeholders, we provide solutions, innovative ideas, and a whole range of different partnership incentives. So always delighted post this webinar to discuss with whomsoever would like to join us. This webinar in particular is on request to pay. Very briefly, request to pay, for those of you who aren't familiar with, is a new service and messaging framework. It was launched in May 2020 this year. It's very interesting. It's to do with the payment of bills online. It assists both debtors and creditors in how it works, and its salient features is the flexibility and the ability for the payer, the debtor, to work with the creditor. I'm going to stop there, except just to say that we've got some excellent panelists. We will be having an interactive discussion. There's no slides, and we will finish the last 15 minutes or so with a Q&A session. I'm delighted to be joined by a CEO of the payments business, John Doyle, and I'm particularly delighted with the panelists. And with that in mind, I will hand over to Bob Ford, who is very well known in the industry. He will be moderating today, and he will introduce the various panelists, or they will introduce themselves as we start. So thank you again, ladies and gentlemen, and look forward to an exciting and interesting interactive discussion. Bob, delighted for you to take over as our moderator today, and thank you again for your participation and your contribution.
Thank you, Elliot. I'd also like to thank you for attending this afternoon, or this morning, this evening, and hope that this illustrious panel of presenters provide you with some interesting insights, thoughts and challenges as how to request to pay can evolve both here in the UK as well as maybe on a more global basis. If you do have any questions, please use the chat capability within the Zoom call. We'll pick those up during the session and try and answer those in the Q&A part after each of the panelists has given some views. Obviously, we may get more questions than we've got time for, and so be assured if you do ask any questions, we'll pick those up after the call and endeavour to respond to you by one or more of the panelists. So Elliot provided a bit of framework to what request to pay is in the UK, but let me add a bit more. Is that firstly, there's a misconception at times around request to pay. Request to pay is not a competitor to the direct debit, it's a complement. The direct debit's been around for 50 years now, and I don't see a reason why it should have to go away because of request to pay. But what request to pay does is it complements the direct debit as a service and provides the payer with greater freedom regarding when to effect a payment, as well as their choice about which account they want to use to pay. Over the years, a number of organisations have sought to introduce request to pay in the UK, but these have tended to be closed loop solutions. In recent times, and with the advent of open banking, Request to Pay has expanded, with Pay.UK creating a set of scheme definitions and rules for a ubiquitous solution. Same time, companies such as Ordo, you'll hear later from Craig Tillotson, have created a Request to Pay solution that is independent of the Pay.UK framework, but leverages open banking for payment execution. The fundamental principle around why all of the panelists have agreed to join today is that we're all committed to the success of Request to Pay, and we all desire to see an expanded use within the UK economy. So, without further ado, I'll work my way through each of the panelists, introduce them, a couple of questions, and then move you through each of the panelists, and then we'll have some more general discussion. My first panelist is James Bushby from MasterCard. James has been in various business development roles within the payments industry for the past 20 or so years. And James joined Voclinker, which is now a MasterCard company, about 5 years ago, where he's held various sales roles and currently has global business development responsibility for Voclinker's real-time payments infrastructure and application products. So James, what's MasterCard's role in this whole Request to Pay?
Thanks, Bob. I guess before I talk about the role, I'll spend literally 1 minute just talking about Voclinker, because some people may, well, in the UK industry, hopefully people do know Voclinker, but just a bit of background. So Voclinker are the critical service provider for central infrastructure services to the core payment schemes within the UK. So what I mean by that is Pay.UK, which Simon is on the panel representing, so I won't go into detail about Pay.UK, I'm sure Simon will, and also the Link ATM scheme. So I guess to put into context, that means about 90% of salaries, 70% of bill payments, and almost all benefits are processed across our infrastructure. We also power circa 60,000 ATMs in the UK. And then we also enable instant payments for businesses and companies 24 hours a day, 7 days a week. So I thought it might be helpful context around Voclinker, because that's ultimately the organisation that I support, but I represent, but of course, who are part of MasterCard as well. As well as the infrastructure services, we've got application and services that support those infrastructure solutions. So we help, again, businesses and people access payment rails smarter, a smarter kind of scalable, more resilient way. And Request to Pay, so I am going to come on to Request to Pay now. So Request to Pay is a great example of one of those. So I know we are, well, I will focus on the UK probably more than globally, but we do, we support Request to Pay at a global level. So as part of the acquisition, we acquired or inherited a platform through Voclinker, which helps for Request to Pay. So at a global level, we use that platform to help support us for bill payments and the messaging. And a big focus for MasterCard for Request to Pay globally is around interoperability across, kind of the Request to Pay markets. As you said, Bob, there are a number of Request to Pay solutions in the UK, and Craig is here representing Ordo and the closed loop. The one that MasterCard are focused on, or Voclinker are focused on, is the open loop service, which is through Pay.UK, the framework through Pay.UK. And there's three key areas of the service. So you've got the bill payment application, which in simple terms is where the biller could submit a request into the Request to Pay ecosystem. You've then got the repository, which sits in the middle. So that the core, there's many functions it does, but the core functions is securely holding and storing those messages, and then routing those messages securely to the biller, to the payer. And then the final piece is the payer application. So the payer application is where the payer, end user customer, can access that request for payment. They then have a number of options that they can respond to, whether that is pay in full, part payments, or then start a conversation with the biller across that ecosystem through the repository. So what role are MasterCard playing? So our core focus is on the repository. So I'd like to think Voclinker and MasterCard are well known for helping third parties connect in a resilient and scalable way. So our focus is on the repository and helping the billers and the payers interact. We also have a white label biller application as well. So that's in case a biller decides that they don't want to build the application themselves, we can support that. I say the core focus for us, for MasterCard, is around that connection of the parties. And I think what do I see as the key things at the moment that we're focused on? It's really education. So I know, as Craig will go into, the request to pay is not a new concept, either in the UK or globally, but from a pay.uk perspective, it is new. So I'm helping educate the key stakeholders to understand the value across that ecosystem. So that's kind of MasterCard's role.
Okay, thanks very much, James. Okay, let's move on to Andy Collishaw, who's from Request to Pay Limited. Nothing officially to do with in its name to the actual scheme or anything, but an independent company, Fintech. Andy has a background in finance and payments for over 35 years. And for the most recent 6 has been in payments innovation and new payment directives. And is a member of the Bank of England Business Advisory Panel and an enterprise advisor for Shropshire, Oop North, for those who aren't too sure where it is. Or to quote somebody who's once said, "Where's Shrewsbury?" And the comment was in about the middle of Division 3. But anyway, Andy, what is, in your opinion, the business case for Request to Pay?
Thanks, Bob, and hi, everyone. Yeah, just a very brief background before I jump to the question. Request to Pay Limited is a provider of the service, and we provide the biller end and also the payer app. We're actually utilising MasterCard's repository in the middle. So now to the question. First of all, there's a famous quote, somewhat dubiously attributed to Henry Ford, and that is, if I had asked people what they wanted, they would have said faster horses. So in the same context, you need to think of Request to Pay as a car and not a faster horse. So, less metaphorically speaking, I will now consolidate the answer with generic and salient points. I'm happy to look at specific use cases post-webinar to elaborate on an individual basis, of course. There are lots of cost drivers within the reconciliation process within companies, and our Request to Pay solution can absolutely introduce a lot of added value within that area, and also that the payment refund reconciliation processes. We can ensure that corporates implement this well within their existing legacy systems, and then the wholesale savings, which can be achieved using Request to Pay, will make a significant difference. The question of the impact that Request to Pay will have on corporates themselves is key, of course, particularly in terms of the challenges of ensuring that the adoption is achieved across sectors beyond the reasonably well understood peer-to-peer market. It has been reported that Tikkie in the Netherlands has seen rapid positive RTP uptake in the peer-to-peer space, while in the business-to-consumer space, demand for Request to Pay has also risen following a surge in at-home delivery, especially more recently due to the coronavirus. And whilst these sectors have obvious potential for further growth and adoption in the near term, corporate uptake of Request to Pay solutions will be a little more difficult given the level of integration needed. So this integration, be it, for example, through the use of QR codes or embedded processes, is vital if corporates wish to ride the RTP wave in the near future. So what ensures the adoption in reality? A term you will certainly hear again today, it's payment agnostic, so it can use open banking faster payments. In order to cement interest on the side of potential adoptees and noting the question of cost, what exactly is the true value of Request to Pay? Without doubt, it's the user experience, and more specifically, the features it presents, which makes RTP so attractive. The fact that the consumer is given the option or feature of approving payment now, approving later, or deferring payment with the potential to embed financing solutions makes it worthwhile for the consumer, who can leverage their preferences. And all of this activity and information is shared real time with the biller. And finally, less directly measurable, but by no means less important, consumer research shows that a whopping 50% of people will be more loyal to a brand that offers request to pay than one that doesn't. Thank you.
Thanks, Andy. I'll move to my next panelist, Craig Tillotson. Craig is the CEO and a co-founder of Ordo, an open banking enabled live request to pay service. Ordo was founded in 2018 and is backed by Nationwide Building Society Ventures and a number of private investors, and has been live since March this year. Prior to founding Ordo, Craig was the chief executive of the faster payment schemes, where he oversaw the opening up of the scheme to challenger banks and non-bank PSPs, such as TransferWise. While at Faster Payments, he initiated the work on request to pay that Simon Brooks is picking up on later. But prior to Faster Payments, Craig was on the board of Vodafone and T-Mobile. He started his career as a strategy consultant at McKinsey's, and what he's always told is that actually he's a graduate in computer science. So Craig, as you know from your time at Faster Payments, the genesis of request to pay service was putting payers back in control of their payments compared to direct debit. You've got a live service. What have you learned about what billers are getting out of the service so far?
Well, thank you for the opportunity to talk with this illustrious panel, and nice to see you again, Simon and others. One of the things we've learned from all the billers we're supporting is that the consumer control aspect, which was at the very heart of the request idea, is clearly very important, and there's actually a bit more to that. But one of the things we found talking to the billers we've got using our service is there are a number of other key drivers for them to adopt a service. And let me be specific. The service I'm talking about is the Ordo service, which is a request service integrated with open banking as an overlay on the faster payment service. So that is the model we've got, and it's an end-to-end model. There are a number of drivers. One of the most profound talking to billers is that we are exposing the very low cost faster payment service into payment situations where cards sit today. The cost base of faster payments and our cost base as an operator is essentially fixed per transaction. It's not a percentage of value. And so one of the reasons that billers come to us is that they can shift from cards where they're paying a percentage of value to the card rails to deliver payments to essentially a faster payment initiated through our service. And that saving for low margin businesses or businesses that have relatively high interchange costs because of the nature of what they're doing can be very significant. So there are some direct cost savings, which can be a really strong business case for adoption. There are also some indirect savings that have been alluded to before. I think possibly the biggest one and the one that's easiest to underestimate is the reconciliation savings. So the RTP model we've implemented means that when a biller receives payment through faster payment that's been initiated by their customer, it will carry the reference that they put onto that request in the first place, and it's carried end to end through the system and is untouchable. So that means if you're a gas company receiving gas payments, the reference you get is what you put there, not gas bill. The thing that continues to surprise me is how significant that cost base is for utilities and other businesses, be it property rental, other things, where you're trying to match the payments you've received in through faster payments today against the accounts and the customers you've got. So there's a very significant saving there. I think there are also some indirect savings that if you're a business that could shift potentially all your payments away from cards, you can move to a model where you haven't got the overheads of PCI, DSS, and all the things associated with it. So there can be some savings there. I think the third element is around fraud reduction, whether that be providing a safer overlay to faster payments to avoid very many of the APP scandals, frauds, etc., and the secure delivery of sort code and account number through the platforms to the customer so that they can't be intercepted and they can't get them wrong, can deliver some real benefits there. And if you compare it then against card payments, when a business biller receives a payment from their customer using open banking and faster payments, that is an irrevocable payment. The payment's been made, there might be a charge back later. So those efficiency savings are great. And then finally, coming back to where we started around what's in it for the customer, clearly there's control, but there's also, certainly with an open banking model, the lack of requirement for a customer to share any payments information at all with either the biller or even with Auto. The open banking model is incredibly clever at the way it protects those things. And also from a usability point of view, if you imagine you're doing an e-commerce payment using this sort of platform, not having to type in a long card number, et cetera, is a huge efficiency and ease of use saving for customers. So I think there's a much bigger set of opportunities and benefits to the whole ecosystem of both billers and customers than maybe we saw in the very early days.
Thank you, Craig. I think your highlighting of open banking really does lead into my next panelist, which is Simon Lyons. Simon's head of the ecosystem engagement at the Open Banking Implementation Entity. He leads the growth of the ecosystem, but with fintechs, banks and corporates, and also drives the market awareness of open banking within the wider community. Driving use cases that highlight the benefits of open banking, Simon focuses on what open banking can deliver to a wider audience. So Simon, where do you see the crossover between open banking and request to pay?
I think crossover maybe is a word I'd replace with complementary. I think what we've got to do here is if we had a beer in the year 2000, Bob, you and I, and we sat there and said, you know, Bob, in 20 years, it's going to take 7 days to lodge a direct debit mandate and get the money in, and it's going to take 3 days for a car payment to be collected. What we've got in open banking is, as Craig just very articulately put, is we've got the ability to change that model. And what we've got is a range of solutions that a broad banner of request to pay covers, and open banking enables in some respects to change the relationship. I think if we look at the failures of direct debits as a perfect use case, it's something I obsess about. I always look, what can open banking do, not how it does it. When a direct debit fails, we've got 15 reason codes, I think, 0 to 9, A, B, C, D, E. For those of you from the payments industry, and there are a reason that they fail. So when it fails, we either collect it again in a month or in a week, and we've got to send a file, or we send a letter and we charge them £3.50. So just put request to pay in that process. Quite simple. Hey, you're going to miss your late payment fee if you respond to this request now. It's something for me that's very, very valid. I think there's also an extremely high compliment here for goods in arrears and goods that are not in arrears. So Craig just mentioned before, and James talks about, you know, the Voclinker space we've got there. If goods are in arrears, then you can argue that the irrevocability of a payment is actually a benefit. And as somebody that has managed millions and millions of transactions in my banking career with the cooperative bank, with local authorities and clearing, I will know one thing, that the reference on a payment is the key to operational success. The value actually is irrelevant. The apportionment of the payment is crucial. If we can pre-prepare that reference, which is what request to pay in its broad spectrum description allows us to do, the benefits internally to high volume businesses are incredible. If we look at Ofgem, they've got something like about £2 billion in suspense accounts. If we look at our own HM government, I do a lot of work with them, we'll be launching the open banking services with them in April. They will have many hundreds of millions of pounds that are unallocated. We know that salary contributions, there's a lot of overpayments on there. The one single reason is reference. So if I give you my golden bullet, which is about the value that we've got from request to pay, it's about improving the flow of funds, getting apportionment quicker, and improving that reconciliation to a level that really is unbelievable. They're all enabled by Pay UK initiatives, request to pay, open banking, payment initiation, complement those as well with a bit of data on the side. And we've suddenly got something that's very, very exciting that addresses a lot of legacy issues.
Thank you, Simon. My next panelist, welcome Mutu, is actually based in Chennai. So at this point, good evening, Mutu. Mutu Gopalakrishnan is a solution architect with Object Frontier Software, OFS. OFS work with fintech companies, enabling them to compete in the digital world. In addition, OFS work with banks and partner with other fintechs to assist in the transformation of legacy systems into modern day digital systems. So Mutu, when you're working and looking at banks and major corporations such as utility companies, how do you see the need of fintech modernization?
Thanks for inviting us for this great opportunity, Bob. The financial technology we refer here is like enabling the advanced technology to all the fintech solutions. So modernization actually started with digitalization, but now the complete digital transformation is what we see as a modernization for the future. Around the world, there are very few companies, very few organizations are matured in digitalization, but I see United Kingdom and some of the organizations UK are really ahead of this modernization. For your question, the fintech modernization, why it is required. So when I say the fundamental modernization requirement is to improve the integrated customer experience and to optimize the operations in efficiency and risk management and scaling to multiple markets and value to the end customers fundamentally. Nowadays, the customers are using multiple digital channels to access their financial solutions. For example, a recent survey, they indicated like approximately 89% of smartphone users are using mobile banking. So that's where the request to pay is actually making a great impact, and it is not just supporting the payers, but also supporting the businesses who wants to join in the modernization line. And request to pay basically enables them to easily join, quickly join, and we help them in the integrations. In a more simple way to put, request to pay is basically a fast track for the modernization.
Thank you very much. My final panelist is Simon Brooks. Some would say maybe the father of request to pay from a UK perspective. I've had the pleasure of working with Simon during my time at Faster Payments. And Simon is one of the few people who I think is more of an evangelist for request to pay than I am. Simon's worked in the financial industry for over 37 years, during which time he's assisted with the introduction of Faster Payments as product manager with HSBC and chaired the APAC's Faster Payments Communications Working Group. Simon also worked in many other areas of HSBC, including payment ops and global risk. Simon is now with Pay.UK and has developed, working with the Payment Strategy Forum, the whole scheme, rules and guidance for request to pay for the UK. So Simon, it's interesting to consider the different ways that request to pay is being implemented around the world. How does the UK version of request to pay differ from other propositions being developed?
Thanks, Bob. Thanks for that quite amazing introduction. I could say you saved the best till last, but that would be very big-headed of me, so I won't do that. Yeah, a really interesting question, and I think the comments from the rest of the panelists have really, set the scene for request to pay and what we're doing here in the UK. And as we've heard, there are a number of propositions out there just in the United Kingdom. Having said that, there are also a number of different variations on the theme throughout the world. Obviously, from a request to pay perspective, I've looked at quite a lot of them to determine what are good bits and what are bad bits. So to the question of what makes the UK one different, to start with, it's a messaging service. It's not a payment service. So you'll have heard the words agnostic used a couple of times in previous responses to questions. Agnostic means we're not solely just faster payments. You can make a BACS payment, you can make a card payment, you can do it via PayPal. We're even looking at the ability to do it through different devices, which I won't say because mine will start talking to me, but you all know what they are. So there are many different ways that request to pay can function, and the UK have looked at it completely differently to the rest of the world. You've also heard people talk about closed loops, and what do we mean by closed loops? Effectively, what we mean is that you have to join a scheme or join a service, and you have to be part of that service to be able to receive and send requests. The Pay.UK version of request to pay isn't like that. What we're trying to do, and James talked about the repositories. If you think of request to pay in the similar way as email, those repositories are the routers of those emails. The difference between request to pay that we've created and the messages that we've created is that they are safe and secure. So this is a secure messaging service. we also have the ability to create different messages. So in the same way that Swift can have different types of payment messages, we can have different types of request messages. And in that, we have created what we've called a PAM, which is a pre-authorization message, which will be sent to from the biller to the payer at the initial setup of a request. So that instant where you're not sure who it is, or you don't know who's trying to request money from you, you actually receive this pre-authorization message, whereby you will be able to determine who the biller is and then give your authority to receive the request, or say, no, I don't know who you are and I don't want to receive that. You may say, well, then that will block everything. Actually, if the biller then contacts you and says, what do you mean you don't know who I am? You know, you've taken my gas from me for the last 10 years. You've asked to take request to pay. The process can be reversed, so that the payer can actually say, actually, I got that wrong. I do now want to receive. So the point I'm trying to make around this is from the request to pay proposition that pay.uk have put together. It's a messaging service that we have the capability to bolt on different types of messages. Throughout the world, the majority, if not about 95% of the RTP solutions that I've seen are this closed loop type, where you have to be part of a closed community. What we've tried to do, as I say, with the one in the UK, is to allow all of those to interact with each other. So, you know, Craig's Auto could join and be able to speak to the MasterCard version. And that way, all billers will have the ability to communicate. And we're not a closed community, we're an open community. And we will allow, you know, the messages to flow between each individual organization and through to whatever device you want to receive it on. It could be on a mobile phone, or it could be on your iPad. It could be through your internet banking solution, multiple ways to receive the request. So we think we've created something that is completely different to anything that is that I've seen out in the rest of the world. And actually, to wrap up, I'm actually talking to the Canadians and the Australians about what we've done here in the UK. So, you know, first stop the United Kingdom, next stop the rest of the world.
I suppose in one respect, with the EPC having launched their request to pay guidelines, I think it was beginning of last week, one is almost seeing a similarity with open banking between the UK OBIE and the Berlin Group, primarily in Europe. And are we in danger of seeing a similar sort of set of two sets of standards morphing in the future as we go forward? Simon Lyons, let's take the first take on sort of open banking versus Berlin Group and request to pay, and then we'll come back to Simon Brooks with request to pay.
So I think one of the dangers that you have to consider when you talk about payments and about standards is that as a payments professional, when you sit inside it, you think that one size fits all. But when you get into industry and you actually look at it, there are nuances across industry where things are completely different. If you give the examples of the Nordics and pooling, and if you look at the way they manage their treasury, because the countries are so closely tied together, then they pool in a completely different way than we would do in the UK. So if you look at the way Kyriba software works there, or any TMS, they work differently. I think there's a lot of talk that seems to be about uniform standards and federalization, and you know, we have to have the same thing across every country. I violently disagree. The nuances of each industry and the way that verticals perform in each area will determine what we use. And you've got to start somewhere. So when you pick your standards, when you've got your influence, Simon's just perfectly articulated to me a really interesting way that request to pay is envisaged as well. And as he's just said, it's different across the world. The UK has done it completely differently. So I think that the answer I would give to you is you have to put a stake in the ground to start somewhere. And, you know, an open banking started on January the 13th, 2018. We've come a long way. We've come a long way.
I agree.
Well, when you get past that first stage and when you get past that first enablement, as I will call it, the use cases are driven then by market and by commercial demands. So I'm going to credentialize that. I'm working with UK government at the moment on a way of including the hash, which any of you that's worked in BACS will know what that is. It's field 7. And it was a little hash that linked the salary across to the payment. And now then only 60% of people can use it because you've got to be a BACS user to do it. So why can't we use it for faster payments? So instead of putting it in the faster payment rails, we're going to use open banking to be able to send that hash. We're actually worked through a pilot. We've already done nearly 10,000 transactions to do it. Now that only comes from picking a start point. The start point of the standards is whatever comes up within the domestic market that gets built. And Bob, you and I hope you'll agree with me violently as well. People want to do things differently. I think our conversations that are going on at the moment with Virginia van Leyden and Boris Johnson having dinner at the moment over in Brussels, and the discussions they're having as well, everybody has a different view. Sometimes federalism doesn't work the best way. The individual standards actually create some competition and the cream rises to the crop. More importantly, it's the industry taking those standards on and using them and then becoming consumable and delivering the benefits, both for the business and for the retailer, for the consumer at the end of it. So I actually think that different standards is a positive thing. I don't think we are heading to federalisation.
Okay, thank you. Simon Brooks, do you want to add anything to that?
Yeah, just briefly, I totally agree with Simon. I mean, it sort of feels like the conversation around VHS and Betamax to a certain extent. But actually, I think Simon hitting the nail right on the head. You know, the standards are what the standards are. What you've got to do is become flexible. So, you know, from an RTP perspective, if you want to start utilizing this globally, then you've got to have that flexibility. And it's not about what we want as payments experts. It's about what the consumer wants and the billers. Yeah. It's how they want to interact with us, and they want to interact globally. So it's not in my interest to build it so it works that way. It's in everybody's interest to build it so it works that way. So, you know, we all have different payment types and different payment methods throughout the world. All you've got to do is be flexible and allow those to happen. You know, the important bit is the consumers are able to use it and the billers are able to use it. And we build it in that way. Simon, you want to jump in on me?
You know what? You just minded me of something there as well. We none of us, we're all experts in our field as well. But if you look at the number of businesses that are registered in the UK, I think we've got more UK limited company registrations in the last 3 years than we have in the entire history of the world. Yeah, and we've got less car accidents now, with 27 times the number of cars than we have in 1908. The point I'm making is none of us can understand what the needs are. Craig's just talked before, and I've spoken to, you know, people like Mark Hartley and Mike Banyard and lots and lots of people across the industry. It's my job as well. We don't know what people want until they become aware of what it is and aware of what's capable. And then when they become aware, they put their own flavor on it as well. It's so important we have flexibility. The wider the extensibility of what we've got, the more it will be adopted. Sorry, 2 answers.
Yeah, just quickly, just finish on that, because I think that's important. I think, you know, there are loads and loads of people that like direct debits. You know, there are 4 billion of them done every year, but that doesn't mean that's the right thing to do. There are, you know, potentially 50% of consumers don't use direct debits. So we should be looking at giving them alternatives, and Request to Pay does give them that alternative.
I agree with you. Thank you.
And what it also does is that control and flexibility. But in the same way a direct debit, as Craig rightly said, you get the reference data that the biller needs. Request to Pays do that as well. You know, as long as we can do that from a biller perspective, why wouldn't a biller take it on board? And from a payer perspective, if I don't have to type in an 18-digit number, that happens automatically. Happy days. So, you know, we can make this thing work globally as well as we can make it work in the UK.
Okay, thanks, guys. I think one of the areas that obviously we've touched on through the discussions has been around open loop and closed loop. Craig, do you want to come in on that one a bit?
Yeah, thanks. Well, I really want to build on one of the points that Simon made, which is sort of closed systems versus open systems. In the early stages of development of the auto proposition, our initial thinking was billers connecting to our platform and the payers will need an app or a service in order to make a payment. As we tested those ideas with real consumers and real businesses, a couple of things hit us that reinforced. First of all, consumers said, I don't necessarily want to download an app or necessarily even register with a service before I use it. And billers quite rightly said, well, so you're telling me, do all my customers have to have sort of pre-register for this service before I can use it. Now, with that feedback, we changed our approach, and the auto model is designed so that once you join the platform as a biller, you can address any of your customers. Now, there are limits. You're limited to 98% of customers because we've only got properly integrated 98% of current accounts through open banking. The last 2% are some other, the tougher ones, those that don't support the open banking APIs. And we built a model which says to any biller, if you've got an email address for your customer or a mobile number for your customer, we will send the request securely. They will be able to look at that request, reject it or pay it, and do that using open banking in the normal way without any downloading of apps or pre-registration. And we think that's vital to allow this service to start to take off. We can't have a service where, as long as everybody's got everything, it works fine. And I think that to me that says that what auto is, it's not a closed loop, because all your customers can use it wherever you want. And I think there's a parallel about the sort of broader debate about where standards apply. Now, clearly, where you've got sort of natural monopoly systems like, say, faster payments, you need a degree of standardization. And between banks with ISO 20022, you clearly need that standardization to allow for interoperation. But let's take a parallel. And Simon described this as a messaging service. Let's look at the messaging services people use day to day. WhatsApp, Facebook Messenger, iMessage, they don't interoperate. There's no standard that they use. They all compete with each other, and they have different degrees of innovation, and they deliver different things to customers, because the barrier for a customer to be a participant in multiple systems is incredibly low. If I've got a smartphone or an internet connection, I can use these services. And my view would be that you can allow competition to drive the innovation and to feed back from billers and customers' needs in a much more dynamic way there, because there's a very, very low cost to having multiple systems competing. Now, I think there's an add-on, and there may be some benefits of interoperation. And what's interesting looking at the EPC scheme rules is it's very clear that in the SEPA area that the request to pay scheme is a framework, and it's really about different providers of request to pay interoperating with each other when that adds value. But it's very clear, it's not a fixed four-corner model. While it's articulating those terms, it's very clear. It recognizes that within the scheme there'll be three-corner models or even direct. And I think we've got to have a model that allows competition to apply here. And that's the competition that's been enabled, frankly, by open banking. That was the key enabler. That plus smartphones and the like fundamentally changes the environment, and then how we approach developing new services for the economy.
Yeah. Okay. Looking at it from where have we got to in just over 6 months of the Pay.UK standards? Andy, in your opinion, how much progress have we made to sort of getting something out there that's useful in a Pay.UK sense? What are we missing?
I think, first of all, I'd just absolutely confirm what's already been said about the flexibility and the fact that it isn't a one-size-fits-all, but we have a very strict framework in which to comply with. And so it's down to the likes of us and the Ordos and others to provide that flexibility. And I think that there's really, when anything as groundbreaking or impactful as request to pay comes to market, there's a general reluctance to be a pioneer. But we absolutely need those pioneers, and we need them to start talking to us. So I think generally that there's a need to add flexibility, and whilst the responses are stipulated from the Pay.UK perspective, there's also, we're looking at incorporating bots and AI capabilities, flagging up certain responses and automation as required. So I think it's really getting people to, particularly banks and large corporates, to grasp just how far-reaching request to pay is in terms of the benefits, and just to talk more to us about how the benefits can be implemented and the savings can be made.
Anybody else want to?
Bob, can I jump in with a comment?
Yeah.
So to be honest, echoing everything everyone's already said. So I think for us, MasterCard, what we look at global level, and I've said this already, is that interoperability is really critical for us. You know, look at EPC. You know, we're already have bill payment solutions live in the market in Europe, but the key thing we try and always do is have that so that it is kind of open and can, you know, if when rules and schemes come into place, we can work with those. And I think to Craig's point, competition is critical, because actually this is more about the end user knowing about request to pay and having a desire to use that as a service. And it's about the billers knowing about request to pay and thinking it's an alternative to direct debit, or it's, you know, sorry, it's complementary to direct debit. It could be an alternative way of paying. Open banking opens all of that up. And so I think, again, in the UK, we certainly, you know, we've spoken to Craig as well, you know, having that flexibility and interoperability between ourselves and, you know, services like Auto, I think will really, really help. But having innovation and competition driving people being aware of request to pay, I think is absolutely critical to scale.
And Bob, can I build on that? I think one of the huge enablers of open banking is not just the addressability in terms of who can pay, but it fundamentally changes which industry can be providing the service. Request to pay is not a banking service. It can be delivered by banks, but it can be delivered by banks in the same way any other technology or service provider can do it. That is an enablement from open banking. And I think that's why we have to think about how this market develops in a slightly different way from, for example, the central payment systems, which have to be delivered by banks or those non-bank PSPs that have got the right authorizations. We've crossed a Rubicon here, which has been enabled by open banking, which says those players that can compete can be very different and much broader and potentially more dynamic than those players that used to operate in the payments market, where it was really the fiefdom of banks, because only they had the right resources, technology and regulatory underpinning to operate.
I also build on that, because I totally agree. I think the competition is absolutely critical to the whole success of RTP. And I agree with Craig, it shouldn't be based on the banks. You know, they can be part of the proposition, but open banking does create that capability.
Yes.
I think, you know, request to pay should accommodate everyone. It goes back to the points I was making earlier on. It's about what the people that want to use the service want. That will drive the competition and will drive how the service is developed over the next months and years going forward. It is about competition, but it's also about offering flexibility, control, and, you know, different ways of paying, different ways of receiving your bills, and a whole myriad of different other things that I think will come as a result of request to pay. You know, there are you know, a lot of other ideas that are starting to manifest themselves as a result of request to pay starting to take hold, not only in the UK but around the world. So I think it's really important that we don't forget that you know, the people that use the services are the ones that are going to make it take off. They're the ones that are going to make it happen. And, you know, through our research, we found that it is that control and flexibility, and also that ability to it being not payment, you know, strict. It's not, you know, the agnostic element of it is quite important. It's that choice element that allows people to decide, yeah, I'll pay it via faster payments. Actually, I could do with paying this one off my credit card. So, you know, that flexibility is also key as much as the element of competition, which I totally agree with.
Yeah, banks don't make payments, customers do.
Yeah.
That's where you drive company.
That one.
That's your groundswell.
Yeah.
There is no payments if they've got no customers. So you react to your market, address your market's needs. And the other one as well, you know, throw a big word in here, liability.
Yeah.
Throw the elephant in the room in as well. And one of the biggest problems you've got is that the liability, and I'm not going to say what the answer is. What I'm going to say is that clarity. If you look at the treasurer in a big corporate, the first thing they're looking at is they're a very conservative view on what that balance sheet is and what they're doing on an overnight basis or what they use. So they want some confidence in that. Now, you can do that two ways. It's got to build market confidence, but also you've got to have some really good understanding of liability and where their risk points are. Where's the constriction? As with all things, you look at your worst spike day for your fraud metrics. You look at the end of March for, you know, self-assessment returns, all the rest of it for things. And the bank have done that on your digital channels for your spike days. We've got to be really realistic. It's not just about the technology. There's a number of facets in this that we address. I think talking to the industries is the one where we understand what they need.
Okay, we've got sort of what's probably sort of about 10, 12 minutes to go. So I think we're sort of hitting that point where we need to start winding down a bit. So what I'd like to do is ask each of the panelists just for a couple of minutes, just to sort of provide some closing thoughts and comments. And I think really it would be around, what do we need to do next? So Simon Brooks, sort of start with you and we'll work our way backwards through the things. Yeah, what's the future? What do we need to do next? How are we going to make this thing fly?
Okay, really good question, and I wish I totally knew the answer to that. I think working collaboratively together is the right way to go. You know, that there are a number of different variations on a theme out there. But to get the critical mass that we're looking for, we need, you know, the customers to come on board. We need the billers to come on board, and we need, you know, the ability to send requests that give those control and flexibility that I've talked about. So it's a push over the next few months into 2021 to get that, you know, to work with open banking to find solutions to deliver request to pay that gets that critical mass to use request to pay, because we all on this panel, I think it's a fantastic idea, and everyone I speak to thinks it's something that should be there. You know, interestingly, I was speaking to the CBI just last week, and they were saying to me, why isn't request to pay available to everyone? It's coming. It is coming, and organisations like that, with their support behind it, I'm sure it will take off in 2021.
Thank you, Simon. Mutu, how do you see the future of request to pay evolving?
I see a lot of opportunities for here. Currently, it is already in a multi-customer experience. People are accessing it in a phone and a computer, and through the kiosk or maybe the over-the-counter. People are accessing it from multiple channels. But I see more opportunities for even bots or maybe the Alexa or Google kind of assistants. The kind of interactions can be even more, and the more interaction makes more business and more customer values. It's not just for the billers, but also for the businesses to come into the platform, and they can also spread up things to the more international markets. I see those things in the roadmap already. So it's like international payments, or like connecting with multi-currency and other things. I'm seeing those things in the international in their existing roadmap. So that's really exciting.
Yeah, thank you. Simon Lyons, how are we going to get these two things working together closer? And
look at the adoption of every single other payment scheme. They talk about the TFL moment, the liability was shifted. Look at faster payments when local governments started doing it. Look at when A-services came out from BACS. Look at the way that was picked up as well. We need precedent. We need precedent, and we're going to get precedent. We're going to have the UK government settle their tender, and they're going to start taking very, very large product payments for open banking. The principle of that is that it changes the mindset of the way the payment is transmitted. It's very similar to request to pay in its actual psyche and the way it works as well. When we get that precedent, it only goes, these are the treacle yards. We are now running through the hardest bits. The first ones to fall are the hardest. But then what happens is it starts solving industry problems. There are lots of legacy problems in banking. There are lots of things that need to be solved. Request to pay addresses a great deal of those problems. Open banking addresses a great deal of those problems. And then we hit the wonderful world of aggregation, where the data in the bank account, the payment ability, the data from a third party comes together. But all I would say is from my own personal point of view in open banking, stick with it, chaps, because this is the hard bit. And I do believe we go over the crest of the hill in around about May or June next year, because we're going to get the public to get the psyche to understand something that we all understand, and we will use jargon and acronym hell, but then the general public will start using buttons in apps. They'll start using things from an electricity provider, start using things from insurance, see different ways to pay. When we hit that and they can refer to our government using it or bigger industry using it, the gates are open.
Thank you. Craig.
So where do we go from here and how do we go forward? I think critical mass is the wrong answer to the right question. I think we need to think in a internet world, not in a historical payments, central payments world. We need ubiquity. And actually Simon Lyons has already delivered that for us with open banking. And we need to recognize that the most important thing is that that multiple players with slightly varying services that meet different needs can sell to businesses and say, you can now use this service to capture value and you can address all your customers with it. And not try and focus on how do we build a critical mass of repositories that can connect to billers and a critical mass of apps that can serve all consumers, and focus on interoperability as the first problem. I think interoperability is a much later problem down the line when there may be efficiency gains and other things from having if you like, these clouds of competition joining together. But we have to have those clouds of competition. And I think we wouldn't have started Ordo without the work that Simon Lyons and his organization have done. It's a critical enabler. Otherwise, we'd be back where we were with things like Pay'M, which I have a lot of experience of, where it's really hard to achieve that critical mass. So let's change our perspective and say, actually, critical mass is not the problem. It's addressability, and there are ways today that the competitive market can deliver. And let's not worry too much about thinking to the future when we've got lots of competing schemes or services that might have some benefit from interoperating. And so let's deal with that later when that's an opportunity. That'd be a high-class problem to have. That's not the problem we have at the moment. The problem we have at the moment is making sure that our service is usable by businesses and all their customers. And I think services like Ordo, and there are other competing services out there, have solved that problem now, and we need to push there. And really, to Simon's other point, all the comms, all the information about what HMRC will all help as well. But whereas in maybe 10 years ago, that public education and driving a small number of players like banks to do things almost against their will is not the solution we need now. The competitive market out there, enabled by open banking, it just needs to be unhindered, and it is my view.
Thank you. Andy.
I think the main thing is we've heard some great closing summaries there, so I'll keep mine fairly succinct. And that is basically that we are going to stick at it. We all believe that's why we're here. So we just need everybody else to start to look at it and talk about it and come on board. The collaboration is absolutely necessary. And I guess the final point is for everybody to remember that this is a car, it's not a faster horse.
James.
It's always great going last. I'm tempted to say what they said, but I will be very quick. So I think there's three key things, in my view, on success. So number one, you need infrastructure, applications, trust. Otherwise, people won't use it, or people across the ecosystem. You need strong use cases, because if there's not value for billers, for end users, and for banks and third parties, they won't invest in it, they won't do it. And then third, and I think most importantly, you need it to be as frictionless as possible for the end user, because if it is, it needs to be either similar or better than what they have today. Otherwise, they won't use it. So they're the kind of, for me, the three things that need to be.
Yes. Okay. Gentlemen, I would like to thank you all for your time and your comments and for the discussion. And ladies and gentlemen who have had the pleasure of listening to us all, thank you for your time this afternoon. I wish you all a very pleasant and safe weekend. And Elliot, I'll hand back to you.
Well, thank you very much, Bob, and a big thank you to our panelists, truly expert in their fields. Just to close from the payments business perspective, one key thing that came out of this for me were the 2 points that, dare I say, the two Simons, Simon Brooks and Simon Lyons said. about control, flexibility and liability. Simon Brooks, your point, it's what the people want. You know, we all talk about these facilities and services, but you know what? If no one knows about them, debtor, if the creditors don't know about it, the biller, well, who's going to use it? So what's come out of this for me, apart from the strong technical side that we've discussed, this front-end functionality and ability to assist the consumers is absolutely key for this to take off. Get it out there, get it known, and get it out so the customer understands. And my final point on that simply is, one of the key customer benefits surely has to be, my direct debit didn't go through, or did go through, should I say. Oh my goodness, I'm in overdraft. Hey, I didn't want that. And so this facility, on something so simple, so straightforward, I'm all for simplicity, will allow the customer, the consumer, the retail individual to see, aha, the flexibility is here. I can't pay it this month. I'll have some flexibility. I'll pay some this month and some next month. I don't go into overdraft. Just something which I find very interesting from a consumer. But I just want to say again, thank you so much, Bob. Very good of you. Thank you again to our panelists and our CEO, John Doyle. We'd be delighted for attendees to give us your feedback. You'll get those who are members of the payments business will get a video, and if you're not a member of the payments business, dare I say, as membership director, become a member. But in all seriousness, ladies and gentlemen, thank you again. Thank you to our panelists, and we look forward to welcoming you again at our series of webinars in 2021. Thank you, good morning, good afternoon, and to our friends in Asia and India, I'm going to say good evening, but I think I should say good night. Thank you. Thank you very much.
Thank you.
Thank you, Bob. Thank you, Elliot.
Yeah, thanks everyone.
Thank you. Bye.
Thank you.